Finally, after watching this video, you will understand exactly what supply and demand is and how you can use it for trading. Because there's so much misinformation out there, people don't understand it. So in this video, I will explain exactly what supply and demand is and how you can actually find really good entries with supply and demand. So let's dive into it. So what is supply and demand? Well, a demand zone is basically a zone of high buying pressure. So a demand zone is a place where there's a lot of buying orders stacked up by either retail traders or the banks, and that's why price will respond to those zones. So let's say you have a demand zone here. Well, there's a lot of orders stacked up in this zone. So when price moves down, it gets into the demand zone, it will likely respond to it and move up because of the high buying pressure. And there are other things influencing this as well, like the liquidity, also understanding the structure, but those things will not be discussed in this video. This video will be purely about supply and demand, because this will be the ultimate supply and demand trading guide so that you don't have to watch another video anymore or never have to buy a course for demand and supply. And for supply, it's obviously the exact opposite thing. So if you have a supply zone, price moves up, is likely to respond to this supply zone and move downwards because of the high selling pressure. So important to understand about supply and demand is that it can be found on every single time frame. So some people would say, well, you need to look at the 4 hour, you need to look at the daily, you need to look at the 1 minute. No, that's BS, because you can find them on every single time frame, and I've seen them being respected on every single time frame. So it really doesn't matter. Price action is always working on every time frame. So you can use 50 minutes, 5 minutes for day trading, for example, finding supply and demand zones. Or you can go to the weekly or the daily for the long-term investing supply and demand zones. And I would suggest to you, use all the time frames, because you want to know what's going on in the higher time frame. Even if you're day trading, you want to know if you're getting into a daily demand or supply, because that can change your daily bias. So I will show you how you can draw in these zones and place an entry. But before I do that, if you're new to the channel, my name is Alan and I've been trading for multiple years, and now I help people to get profitable. I don't sell a video course, so all of my videos are completely for free. I do have a profitability program, so if you struggle to get profitable, then that might be something for you. And watch to the end of the video to know more about the program. Okay, so now I will show you how you can find a demand zone. So what you're looking for in those zones is one single candle. So you want to find one candle that you can select as your zone. So let's say we have found this candle as our demand zone. Well, then we select this candle and this will be the whole demand zone that we're looking for. And now you might think, okay, how do I select one candle? How do I find this candle? Well, what you're basically looking for is rapid price movements. So you want to see movements that are rapidly moving upwards or downwards. If you see a rapid price movement that moved upwards, it will likely create a gap. So as you can see, it created an empty space in the chart. This is called a gap, and this gap needs to be filled up by price. And then at the start of this movement, that's where you want to look for your demand zone. So you want to look for one specific candle to select it as your demand zone. And why are we looking for these rapid price movements? Well, that's because this tells you that there's a lot of buying pressure there, because price already moved very rapidly from this point. So this tells me that there's a lot of buying pressure in this area. And if you then also find a clear demand zone, it's likely to respond to this zone again. So you're looking for a movement, then for one specific candle. And to select the candle, you're looking for a fair value gap. So not the gap that I just talked about, not the big gap here, but a gap between the individual candles. I've made a video about fair value gaps, so watch the video because I go more into detail. But to shortly explain it, it's the gap between your first candle and between your third candle. So if this is your first bullish candle and this is the candle that we want to select for our demand zone, then we are looking for a fair value gap between our first candle and third candle, created by this second candle, obviously. So let's say we see this candle and we select it as our demand zone, then we need to have a fair value gap above it. So if it looked like this and the candle already touched the zone and there is no fair value gap, there is no gap between this candle and this candle, then it's not a valid demand zone. So a demand or supply zone is only valid if there is a fair value gap. So basically, this is exactly what you're looking for. A big movement upwards, creating an empty space in your chart, and then also a individual fair value gap between those individual candles. And then you simply select the candle with the fair value gap, the most defensive first candle, that will be your demand zone. And if you're completely new to trading, this might be a little bit confusing. So watch the video about fair value gaps as well after this. But I will show some real examples which will probably make it easier and will explain everything for you. So here's an example which I think is perfect because you see that price is going down with relatively low volume. And then suddenly it moves up very rapidly. So we see this rapid price movement and it created this gap at the time. So if we play it on replay, this would have been your analysis. So you open your chart, you see that there has been a rapid price movement upwards, and then you start looking for a demand zone because you see this huge gap which will be filled up by price. So you need to look for your demand zone to possibly place an entry. Well, I see multiple demand zones actually. I see this one. I see this one. And then I also see this one. And why these demand zones? Well, that's because there's a fair value gap above these demand zones. As you can see here, there's a fair value gap above it because there is a space between this candle that we selected as the demand zone and the third candle. So this is your first candle selected as the demand zone. This is your second candle moving upwards. In your third candle, this is the bottom of it. So there's a space between your first and third candle. So we have a fair value gap that tells me that this is a valid demand zone. And this is also a valid demand zone because there's also a fair value gap here. However, I'm not selecting those zones for a possible entry. I do keep them in mind, so I draw them in because price could be reacting to these demand zones. However, this is the most defensive demand zone in this whole rapid price movement. So you're looking for the most defensive demand zone because that's likely to be the best entry. And you can see that this also created the fair value gap that we're looking for. So if we take this example, how could you have placed a trade? Well, it's very simple. You can place your entry on the demand zone. So simply draw in the demand zone by finding one candle with a fair value gap, and then you draw an entry on the demand zone. That's it. Otherwise, you could also say, I want to be more aggressive and I want to place my entry on top of the fair value gap. So I changed this up with every single setup. Sometimes I place my entry on the demand zone itself, and sometimes I place it on the fair value gap. And if you want to be really defensive, you can even place it at the bottom of the demand zone, but you will likely see that you're not getting into the trade. So if in this example we simply put it on top of the demand zone itself, so not on the fair value gap, but on the demand zone, let's see what happened. So as you can see, price perfectly mitigated your demand zone here. If you cannot see it correctly, this is the wick that filled your entry. So you had your entry here and we didn't really place our stop loss, so it doesn't really matter. But it's about the idea that price is being respected by these zones. As you can see, price perfectly responded to this zone because there's a fair value gap here. And then it moved up. And although it moved down afterwards, you could have picked up a really good trade within this movement. And the funny thing is, I can show you a supply zone in the same picture because there's a supply zone here. This is also a movement going down very rapidly. And you see that it created, this candle created a small fair value gap. So it's very small. However, it is a fair value gap. And some people actually call it an imbalance, by the way. So if you're familiar with the term imbalance, it's the same thing. So you see that it created this very small fair value gap, but the size or the distance of the fair value gap does not matter. It's just about it being present. So there needs to be a fair value gap, even if it's really narrow, really small, it needs to be there. So as you can see, this was your supply zone with the fair value gap, and it would have been a very good trade as well. So this is another example. You see that price moved upwards with this movement. Not really a very rapid movement, but still I count it as a rapid price movement because it created a gap. So as you can see, it created a gap in the price action here. So we're looking for a possible demand zone. And I immediately see this one, because this is the most defensive demand zone in this area, and you can see it created a fair value gap here. So again, if we just placed our entry on top of the demand zone, let's see what would have happened. So as you can see, it responded to the demand zone 2 times actually, here and here. And if you place your stop loss below the demand zone, you could have had a 2.6 risk reward. So this is how you find supply and demand zones very easily. And if you don't quite understand it, you could watch another video about the fair value gaps, for example, and it will all make sense to you. So before you go into your chart and place your entries on these zones, you can use these zones for your entries, but you also have different ways of finding entries. If you want to know more about liquidity, for example, about how to find high probability entries, you can also watch my other videos about those strategies. So before we end the video, like I said in the beginning, if you struggle to get consistently profitable, you can send me a DM on Instagram @AlanTheTrader, because I can then see if you are eligible for the profitability program, in which you will get profitable within just a few months instead of years. So send me a message on Instagram to learn more, and thanks for watching the video. I will see you next time.